Wealthworthy Podcast. I'm Trisha.
Hi, I'm Darian.
Thank you for joining us. This week we wanted to talk about a few stocks under $50. Now, there's been a ton of praise around the stock market in general, the fact that people are seeing these huge increases in the market. Everyone's excited. We have a number of new people joining the market, trying to figure out what it means to trade and how they can invest to grow their earnings. But one of the biggest issues is the fact that you could easily be costing yourself money by buying too high. And so a good way to recognize whether or not you're buying high is to either look at it fundamentally or to look at some technical analysis where you're saying that you believe the stock will be able to appreciate to a certain amount, or you look at it and say that this stock is undervalued. I think that it's worth more than what it's currently selling for, or even if you don't think it's worth that, you're seeing some trend, some momentum that makes you believe that the value of the company will appreciate. So a lot of what's going on now is speculation, right? We all hear and feel that there are price movements that will happen, especially when we talk about Tesla and some of the larger players in the market like Netflix, even Peloton, right? Just people are reacting to how they feel things will be based on what the market has been doing. And because we're stuck in this stay-at-home lifestyle, right, you're trying to think through what you could be doing differently and how you can invest your money and what people might be spending their money on. So those are priced much higher, obviously, right? Like Tesla is now in the 1,500 range. You have a number of stocks that are creeping up to those amounts per share or just kind of out of reach. So we wanted to talk about stocks that we know are under the $50 mark and could have some promise. So that's also one of the biggest regrets that people have, right? Like, oh, I could have gotten in on this stock when it was under a certain price. So some of the areas that we were looking at include the 5G market, right? Looking at tech stocks, because we know that those areas are areas that will grow. And it's more so about understanding the kind of work that the companies are doing than it is the actual price of the stock right now. You have to feel like you believe in the people running the company. You have to feel like you understand the service or product offering. And those are areas of the market where you can do some digging, you can really dive in. Even when we talk about electric cars, there are a number of potential competitors to Tesla that we'll have been speaking about. So in the 5G space, there's a company called Excelis Tech, and they are currently in the $20 to $30 range. And if you wanted to get into it, looking to get in closer to the $25 mark is probably a good space for it right now. But they have been profitable. They've beat their earnings in the most recent quarters that were reported out. And it's an area where you know there's some momentum with 5G. Another one in the 5G space is Inseego Corp, and they are still operating at a loss right now, but they did beat their Q1 estimates, and there's been recent volume with different things going on within the company. So their purchase behavior, the things that they're working on, and that's trading closer to the $10 to $15 range. So if you can get it closer to 10, then that may also be a good one to look into. There are areas where people aren't sure how some of the major players are going to do if they've been in the market for a while. And one company like that is Cisco, where people aren't sure how they are playing the field technically. technically, like when you talk about the digital space. Like they've been doing great when it comes to cable, but trying to figure out what they're going to do in the digital space has been a question mark, and you've seen certain investors selling off the shares that they do have. So I think that right now, if you were interested in investing in Cisco, the price is similar to what it's been in the past. So it's a pretty stable cost now. But the question is whether you think that they'll be able to rise to the occasion and put out products that will be of value to the market. So if you could get, or if you wanted to do some more research on Cisco, that may be a good one to look at, because they have been beating their earning estimates. And even though it hasn't rebounded as much as other firms, it's still a reasonable price. It's a stable stock. They have dividends. So it could be something worth looking into further, or just trying to watch it. In the electric vehicle space, there are a couple of things that people are watching, but I think it's harder to gauge the electric space because Tesla has such a wide view on how they will move and change the automobile industry as a whole. And a lot of the smaller players don't necessarily have that same wide range, right? Like they might be focused on specific areas. But one that's been coming up a lot is Tortoise, which is really it's a shell kind of company where they are created solely to execute a merger or an acquisition. And so in that case, they are looking to acquire a company, I might say it wrong, but it's Hyliion, and that's a truck company essentially for electric vehicles. And so that company has been doing well on its own in the private space, has a number of deals that are currently on the market. They've been working with Penske Trucks. They've been working with other retailers and leasing companies. And so I think that they are positioned well to capture the market that's there now. But the question is just whether you think wide adoption is likely or not. And so it could be worth investing in if you can get in under $15 and then it shots up to a couple $100, right? Like that could be a worthy investment, but that's all speculative. So it's harder to gauge that type of expectation, because now you're just saying, I don't know who's going to win this battle. But if you did have to choose somebody, at least choosing a company that you know already has contracts on the table, already has a product, like it's a safer bet than some of the other electric vehicle companies out there where they're just talking about what their plans are and how they intend on approaching the market. So that's another area that you can look into for sure, and that is currently trading around or under that $15 mark. Another area is gaming. I think a lot of people are interested and have been looking for different entertainment opportunities for adults and kids, right? Like people are just looking for different entertainment options. And in this case, SidePlay is one that has been priced pretty reasonably. And when I look at the growth potential, it's kind of neutral. I don't see a huge growth spike or like any kind of upward trend. So it's one that also might be a little more speculative, but they have had a recent acquisition of Come to Play. And so that has been giving some momentum to the stock. But I think of it the same way that I think about Zynga, where it's really a small cap kind of stock. And so you can see some growth, but it might not be to the magnitude that you would want. So all in, I would say that a lot of these up and coming technologies and different areas that we are expecting to continue growing and see some return or change to the patterns of our behavior are areas that are good to continue digging into, whether it's these or others that you might like. If you know of a few that you like, feel free to share with the rest of our listeners. But I think that's the best that we can do, is really do our due diligence, figure out what we're willing to spend, and be willing to minimize your risk by doing everything you can to dig in and understand what a good price looks like. I've been using Weibo to look at the financial charts. I've plotted a couple of moving averages to see what prices look reasonable. And so those are some easy ways that you can try to mitigate the risk of you buying too high, which is usually the problem, right? Like you're like, oh, it's moving up, let me jump in now. But you really do have to pause, look for a good price, and see if it's something that you think will increase. Even if you don't look at that aspect of it, but you look at who's running the company and whether or not you would put trust in that person with your money, it could help you make that decision, decide what's right. Any tips that you have, Darian?
I just think about it like any other investment. You never know how it's going to play out. I guess a tip, 1 or 2 stops away from being a millionaire. You never know, because the market changes daily, and sometimes the things that we think aren't going to give us a gain will, and then vice versa. So just be open to change and be open to taking on the challenge, and just make sure you always do your research as much as you can.
Yeah, agreed. I think too, you don't always have to jump in right away. You can watch the stock for a while. You can paper trade it for a little bit, see how it moves. Look for a chance for the price to pull back a little bit. When you start seeing a little dip in the price, decide that that's the time to enter. Or if you're using the charts, looking at that technical side, whatever the case, you just want to be sure that you understand the current price, why it might be priced that way, and whether or not you think that that's a reasonable price for it. Because there are a number of stocks that are in that under $50 range, but it's all in figuring out which ones have the kind of leadership, the kind of innovation, the kind of competitive advantage to keep them pushing. Because, we think about things like Virgin Galactic, where they are doing something that's uncharted for recreational purposes, right? Like people aren't just trying to go to space on a regular basis as a means of tourism, but now that's presented as an option. And so whether we think that it can get there or not is what we're banking on when you talk about those kind of stocks. And with electric vehicles, same deal. Like another one that comes up a lot is Workhorse, and that's also under the $50 mark. So just looking into it, doing some digging, seeing if it makes any sense. And in some cases, you might decide a couple of dollars in each of the ones you're most interested in might be worth it. And you just continue adding dollars onto that as you go along, so that you can kind of average out your costs, do some dollar cost averaging, and position yourself to take advantage of any large spikes or changes in the market. And of course, if you are purchasing stocks that are priced pretty high, or you expect a high return, if you can do it within accounts that have protections for taxes, then that would be ideal. Right? So if you're doing it within an IRA, you're doing it within your 401k, if you have specific kinds of custodial accounts, the HSA, right? Any account that you have that kind of flexibility to get appreciation without being penalized in the sense of taxes, then that might be a good option. Obviously, if you are gaining a good amount, maybe you don't mind paying the taxes as much, because now it's become part of your earnings. But whatever the case, you want to be mindful of it. So with that, I think giving you a couple of options for you to dig into and determine if it's something you like. But I know a couple of those I will be digging into myself. I've put in like my target prices and I will see if it's something I can attain for that price. So we'll see how that goes. Thank you all for joining. Until next week. Bye.
Bye.